All right, what is up, YouTube? Welcome back to another video. If you clicked on the video, I'm sure you are wondering how to find the most high probability fair value gaps on your chart and how to use them correctly. Now, I would share with you some of my experiences in fair value gaps and which ones will hold, which ones will not, and how you can expect to take a trade off of one of them, especially off the higher time frames. So, first of all, let's talk about a fair value gap that you probably don't want to use to hold price. All right, something like that would be like this fair value gap right here. Why is this super bad? There's plenty of reasons, right? First of all, we have bullish order flow on the higher time frame, right? And this is just a super tiny gap. It's probably not even a point. It's 0.25 points, okay? Like you do not want to be expecting this fair value gap to get a reaction whatsoever. And we also have this giant rejection wick right here. So obviously this is a bad fair value gap and we are not expecting this to hold price at all. All right, perfect. Since we got that out of the way, that's pretty obvious. Don't expect those to hold. I don't know why I can't delete this. Let's just talk about a fair value gap that is high quality. So something that would be high quality is something like this. It's a very displacing fair value gap. It's large. It is very large. And we can expect price to at least get a reaction out of this area. But obviously we did not tap into it. But I also want to talk about what you want to see on the lower time frames as well, because you might just look at this 5 minute fair value gap, it looks solid, there's nothing else to see, but you also want to go down to the lower time frame and make sure that we have just clear displacement. Obviously on this one, this is high quality. We have two candles making up this fair value gap pretty much. Two big candles that make it, and then obviously we came up here to form the bottom of the 5 minute. But you also want to pay attention to the biggest 1 minute fair value gap. That is what I'm looking at the most and what I found to be super, super helpful, especially when you're trying to get those precision entries. So obviously in this one, the biggest 1 minute was kind of sitting outside the 5 minute that hasn't formed yet. So we tapped in this big 1 minute gap and then absolutely dumped from that point forward, right? So you can expect the biggest fair value gap on each time frame to get a reaction on the respective time frames. So on the 1 minute, we respected the 1 minute fair value gap and just dumped. All right, but now I want to go into the 15 minute and the higher time frames to show you some fair value gaps that do not have the proper lower time frame um, support that they need. So something like that would be let's do something like, damn, these are all kind of good. I'm not gonna lie. These are all kind of clean. I'm gonna be scrolling forever. I gotta pick something here. All right, let's just take this bearish fair value gap here. All right, so obviously I'm marking this on the 15 minute. So obviously on the 15 minute, we saw this respected really nice. We did not get a body close inside. We just whipped into it. Looks super clean, right? Now we want to go down into the 5 minute to get that more precise entry. So you're not just, trading off the 15 minute, right? Go down to the 5 minute. Fucking lost. I lost it. There it is. Okay. So on the 5 minute, our biggest 5 minute gap is going to be right here. So now we have an even more precise entry, right? We just tap into the 5 minute, never got a body close inside, right? Perfect. Let's go down to the 1 minute now and see if we can get even more precise with where we're going to stop. I lost it. I did not go this far back. All right. Pause for a second. I completely lost it. Mm, okay, let's do this. Nice. All right, we got this to work. So now we are looking at the biggest 1 minute gap. So where is the biggest 1 minute gap? Here it is right here. So now we have three different time frames aligned to find the biggest of each of them, right? And now we see that the biggest 1 minute was the only one that got tapped into once and never tapped into again, right? No body closes inside, rather than the body closes in every other spot. So obviously, when you're taking this entry, this is going to be the best spot to short, right? This is going to be, obviously you're not shorting right off this candle, right? You cannot expect to stop. But after we see, rejection like this, or a candle close, something like this, we are pretty guaranteed to go take at least these lows right here. So that is how I am looking at fair value gaps. And to make it even better, you can pair it with a fib to get an even more precise entry. I'm not sure if this one lines up, but yeah, it does. Okay. So tapping the 0.5 range of, mm, this whole down move is going to be the highest probability spot for us to reverse. And obviously, we tapped to 0.5, we made it into this range between 0.5 and 0.62 and immediately reversed, right? So when I'm looking to take gap entries and continuations, that is what I'm looking for, the biggest of each time frame to get tapped, and then see a reaction out of it on the lowest time frame for an entry. So yeah, that's the whole video. I'm probably gonna do a video on fibs, maybe some sort of, I don't know. I'm gonna make another video like this soon, but I thought this was pretty useful information. I know probably a lot of other people mention it, but the biggest gap of each will help you get that precise entry rather than just taking a higher time frame entry and having a super long stop, and you can get pretty precise with it. So, all right, hope you guys enjoyed. New Discord opening soon, so stay tuned for that, and you'll have a good one.